Tom Lee just dropped a massive update on the small caps. You know he's been super bullish on these small caps. You know I have huge trades on the small caps. The trades that I have out there, I could potentially make hundreds of thousands of dollars. You guys potentially could too. I'm gonna walk you through my entire portfolio. It's up to 802,000 right now. I'm gonna show you the exact trades that I have on the small caps, and I'm gonna show you what I'm gonna do with them because of what Tom Lee just said. So I'm gonna play an interview right now. It's about a 3-minute interview, and then we're gonna go into my portfolio and then talk about what we're gonna do with this.
Joining us now, Fundstrat Global Advisors, Head of Research and CNBC contributor Tom Lee. Tom, great to have you with us. Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed NVIDIA's numbers? It, of course, fell initially in the pre-market. Yesterday morning, it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think NVIDIA is one of these stocks that has become part of like a stock market lore. Almost everyone has a position. And I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also NVIDIA's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome, and I think it just shows you that there's room for a lot of rotation, and I think that it's revealing that small caps is one of the groups benefiting from that rotation.
Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just the NVIDIAs of this world.
Valuations are definitely something our clients are asking us about because, the equity markets have been rising for several years. But the idea of a rotation, I think, is grounded on a couple of things. One is that the Fed's rate path is lower, and that benefits cyclical stocks and small caps. And we know there's also a lot of cash on the sidelines, and investors de-risked because of the yen crisis and just general concerns about the summer. And so I think the NVIDIA results plus the Fed in September is really the catalyst that is going to get some investors to actually follow through with the rotation. So I think we're early because, for instance, small caps, I know people think they're expensive, but the median PE of a Russell 2000 stock is still 10.7 times forward earnings. That's compared to almost 17 times for the S&P. So the small caps have a lot of room for multiple expansion.
But Tom, do you want to just own the index? I mean, there's a lot of not great companies when you talk about small caps, in terms of just not just their indebtedness, but any number of other metrics you might want to use. Are you telling people they should buy individual stocks or just buy the index?
I think it's both, David. We have a lot of portfolio managers that actually focus on small caps, and they're finding a lot of really attractive individual ideas with good earnings growth. But I think there is a misconception about the Russell 2000. I know there's many non-earners, but over 70% of the non-earners in the Russell 2000 are biotech stocks, and I don't think they're meant to generate earnings. And if you look at Russell 2000 earnings in aggregate, it rose 18% in the quarter, and it's projected to grow 39% in the third quarter. So in aggregate, it's not a bad index to own anyways.
Tom, I wanted to get your thoughts on the broader economic data. This morning, PCE came in line with expectations. We had GDP yesterday at 3% versus the 2.8% estimate. As we start to get ready for an interest rate cut, how much is already priced into this market?
We'll never know how much good news is priced in, but I think there was a lot of encouragement in both of the data points you point out. PCE core came in at 0.16. The upside driver there was actually financial services, which is because the stock market's up. It's showing up as inflation in PCE core. The year over year is staying at 2.5, 2.6, which means most people were thinking that year over year would actually tick up. They had negative revisions for the prior months. And on the inflation side, a 2.8 for UMich 1 year, that's pre-pandemic levels of inflation. Consumers are always around 2.8, so I think this is giving the Fed a lot more green light to cut and focus on keeping the labor market strong, which means it's essentially acting as a Fed put going forward.
So Tom Lee has a couple really good points about small caps. he's saying that the median P ratio on small caps is 10.7, but the median P ratio on the S&P 500 is 17. So when you compare small caps to the S&P 500, small caps appear to be undervalued. So this is a 5-year chart on IWM right here. So IWM is one of the most popular ETFs that track the Russell 2000. So you could see on this 5-year chart that IWM has been floating around this $200 level for a long time. You know, it's been a little bit below, a little bit above, but there's been super strong support around this $200 level for like 5 years now. Now he's saying that the earnings growth in the Russell 2000 companies is up double digits quarter over quarter over quarter. So that's starting to get realized in the price. And you guys know that sometime around June is when I started reporting on Tom Lee and the small caps. And then that's when I pulled the trigger and made a couple plays. I bought some call options and I sold some put options. I'm going to show you those trades in just a minute, but I just want to hit on this for another second. So, you know, there's strong support around the 200 level. It's a big psychological level, and I feel like the Russell is undervalued as compared to the NASDAQ or the S&P 500, for example. So that's why I made these trades on the IWM. So just a few little points on why I like the IWM. Number one, rates are going to go down, which is going to help the small cap companies because they're very interest rate sensitive and they borrow a lot of money. So if they could borrow rates much cheaper, they're going to be having way more money go to the bottom line in their companies. Number two, I think that Trump is most likely to win the presidency. I'm not going to get political with you guys. I don't care who wins, but I'm just saying that if he wins, he's going to be more for deregulation and cutting interest rates. I know that the Federal Reserve and Trump are supposed to be separate, but if Powell doesn't signal that he's going to cut as much as Trump wants him to, Trump will fire Powell and put someone in the Fed that will cut. And number three, just a relative valuation metric. Russell has a P ratio of 10.7, S&P 500 is at 17, so I feel like I'm getting a little bit of a discount right there. So now heading into my portfolio, so you can see I'm at $802,000 right now. You can see that dip that happened over here on the right hand side. I was up to about $803,000, so I'm pretty much even with what I was at then. And I took a big dip, you know, when that happened a few weeks ago. I was down to $660,000, but I wasn't panicking. You guys know I stress have confidence in your trades, and the way that you get confidence is when you research your trades and you actually understand what you're doing. So I had confidence, I bought the dip, bought some calls, sold some puts, I rode this bounce way up. You gotta understand that my portfolio is roughly even with what it was at before that dip happened, and stocks right now are still probably about 5% off their all-time highs. You know, I have a lot of money in the Qs, Triple Q. You know, if Triple Q right now is, you know, $480 a share, all-time high was 500, but I'm even right now in my portfolio. So from 480 to 500 is pure juice in my portfolio. So going through my portfolio right now, you can see I have my Triple Q shares, 912 right there. They're worth about $434,000. BOL, I got 440 shares. Tesla, I have 500 shares. You can see I sold some puts on Tesla, bunch of Triple Q puts that I sold some on Apple, sold some on the Qs again. And then over here on IWM. So for IWM for this trade right here, I did the 215 put and I sold 10 contracts. That has an expiration date of 6/20 of 2025. And right now I'm pretty much flat on that trade. So I received roughly almost $12,000 in premium on that trade. So I got credited that $12,000 to my account immediately. And then I turned around and I bought some calls on IWM. So you can see here I bought 15 call contracts on IWM. I'm roughly flat on this trade, and the total value of those calls right now is about $28,000. So we have the 15 contracts at a 220 strike, and the expiration date is also 6/20 of 2025. So we could get pretty creative with this right now. So Tom Lee's calling for the IWM to hit $300 by the end of the year. If IWM hits $300 by the end of the year, remember, I have my strike price at $220 on those calls. So 220 and 300, that's an $80 per share that I make. So I bought 15 call contracts, but you guys know that gives me the right, but not the obligation, to buy 1,500 shares because every contract is 100 shares. So 1,500 shares, and if I'm up $80 per share on 1,500 shares, I'm gonna be up $120,000 just on these call contracts alone. And then if that happens, these puts that I sold right here, they're gonna be pretty much expiring worthless, so just say another 10K. So that right there, this one trade alone could make me $130,000. I have a couple different accounts, but this account right here will be like $130,000 higher. Now the only thing that's gonna suck about this trade is I'm gonna have such a huge short-term capital gain on it, but that's okay. I mean, I'll take $130,000 in profit, and you know, I'll take the 20% hit on the taxes, and I'll try to find things to write off against it. But 130K on one trade. Now, a lot of you guys I'm going to cover super quick on the right hand side. You're going to say, how much money do you have in your account to sell these puts? I have no cash in my account. I have shares of Triple Q, VO, and Tesla. These shares are the collateral that I use to sell puts. I am not on margin right now when I sell puts. So there's a complex formula, and I've called Schwab multiple times to get the answer from them. The way that you calculate how much money you have to have in your account, these are the numbers on the right hand side. It's a margin requirement. So you can see for these Tesla puts, for example, I sold 10 puts for $170 strike. So $170, I'm technically on the hook for $170,000 that I'm gonna have to buy worth of Tesla stock. Now, if the share price of Tesla were to fall, this margin requirement will go up quite a bit because the trade is more likely to expire in the money. So just think of how much margin requirement you need in Schwab. Just think of it as the closer it is to expiring in the money, the more margin requirement you're gonna need. And then if Tesla stock starts to pump, maybe especially going into Robotaxi day, this margin requirement is gonna go down. So that's just a quick little update on IWM and what I have open in my portfolio. Check my links below. I have my Discord link below, my X link below. I post all day long for market updates in there. Every Sunday in Discord at 9 a.m. Pacific time, I go live, so hop in that. It's free for everyone. If you want to learn how I trade stock options, link for a video on that below. If you want to learn about my story, how I went from 0 to 1.5 million in 5 years, video for that below. I make all these videos for you guys to help inspire you guys and to show you that I'm just a regular guy, and if I could do it, you could do it too. So if you made it this far, like, subscribe, and I'll see you guys later.